Yeah, what up, guys? I'm just gonna go over like today's trades, pretty much. Just gonna go over it right quick. So this is 8:30, and then we're gonna have the 9 o'clock session open. So let me just put 9. This is 9 o'clock a.m. So you guys could see that from from Asia into London, we were just accumulating this whole entire range, right? So this is known as accumulation range right here. See how we accumulate this whole entire range? So the step one part of PO3 model um, is simply that price action will always accumulate, manipulate either direction down and then up, or we accumulate and go up and then come back down. There's no in between. The way to get the entries, like I said and mentioned again, fair value gaps or CISDs. So fair value gaps and CISDs. That's the way you'll enter your trades. So you guys can clearly see that we're accumulating this whole entire range, right? There's no clear edge of where we're going, right? All we know right now is that we have a manipulation leg and we want to see where it's possibly going to hunt liquidity. Now, liquidities are those long wicks, right? So it's possible that market will take this liquidity out, which is guaranteed, and market could also take one of these two liquidities, right? This one, or it could potentially take also this liquidity right here. So what we're simply doing is we're looking at the high time frame, 30-minute, for the story, right? This is telling me the story, right? This is where my story is forming. This is where I know accumulation. Hopefully I spelled that right. I don't even know if I did, but hopefully it's right. Um, accumulation. It's a U accumulation. So this is accumulation, right? So we have accumulation here. We have the manipulation leg, right? We have the manipulation leg is this right here, right? So we could literally write manipulation leg. So right now we have the manipulation leg, which is simply this right here, right? So manipulation leg is gonna go and tap in some sort of liquidity. All we're doing is waiting for the lower time frame to give us the entry, right? So if we're waiting for lower time frame to give us the entry, we're simply waiting for one of these three liquidities to get taken out, or all three to get taken out, that we could play the opposite. Because remember, what's our bias already for the day? If we know price action is accumulating, and then price action, then we have this manipulation leg. What are we thinking that price is actually going? What is the actual intention, right? The actual intention is, okay, if I have accumulation, I have manipulation going down, my scenario is I should be bullish for the day, because remember what I told you guys, accumulation, if you manipulate down, smart money technique is that it's telling you that it's going to go back up, right? We just need to find the entry point on the lower time frame, whether it being an inverse fair value gap or a CISD. So what we're going to do now is, like I said, we'll drop down to the lower time frame, right? We go down to the 1 minute. We go down to the 1 minute, right? I remember there was a lot of barcodes that was happening today, so we're gonna wait. Even like shorts, if whoever played shorts, that's great. You made your money. That's great. You played a manipulation leg. But the real moves are those that understand that PO3 is the opposite, right? It's the opposite of what retailers are doing, because the whole point of PO3 is that you want to get out of where retailers are getting stuck. So a lot of retailers are going to get stuck with this, and you'll see why in the next couple of seconds. So if we're playing this out, right, boom, we got that liquidity. A lot of people might think, oh, okay, this is a change in state of delivery, and then like, okay, that's change in state of delivery, but do we have a inversion of a fair value gap? So there's a bullish fair value gap that we touched so many times, but we have a CIZ, but we're still respecting this gap. So if we pushed above, then yes, we could have taken this long right away. However, you can see that throughout time, like all we're doing is just going in that range, coming back to that range, and then boom, we just keep dropping lower and lower. So you can see that we're still dropping, right? So we're dropping. We took this liquidity out, so that's done. Now we're taking the second liquidity. Now we will see if we could potentially get to the third liquidity level. However, you can see that price action is starting to move back up, right? Slowly, slowly, steadily. So you see how we're getting very close, right? So this is the model. I'm gonna come up with a name for this model, but it's where internal liquidity first gets swept, and then the real move happens. So for example, like this internal liquidity got sweat, so people would play shorts. However, in this case scenario, our bias is bullish throughout the whole entire day. So if our bias is bullish throughout the day, we're looking for a CISD and we're looking for an inversion of a fair value gap. So this fair value gap, right, is getting respected and is still being respected throughout the little time frame that we have here, right? So what I want to see is price action to push up, right? So we could clearly see we have a change in state delivery right here, right? We have a change in state delivery right here, right? um, right? Price action closed above, right? And we also have this bearish fair value gap right here. So the way CISD works is if you have a bullish CISD, you need a bearish fair value gap to get inverse to take longs, right? Again, you need a you need a bullish CISD plus a bearish fair value gap to get inverse in order for longs to be valid, right? So if we want longs to be valid here, right, we want to see a closure above this level, right? We want to see a closure above 23.5, I believe it was 539. That's the one we called out during live as well too, 23.539. So we want to see a closure above that level, and then we'll simply take our longs, right? So we're gonna wait. Okay, boom, we got the closure above, right? We got the closure above. What we're gonna do now is take the long, put our stop loss at a protective low. Either you could bring it down to here, this would be a protective low, or simply the last the last candles, the last downward candle that made the impulsive move of the price action to move up, right? This is the last impulsive candle that made the decision for where price action needs to go up, right? All we're simply targeting is equal liquidity, right? Which is internal liquidity is right here, 565. We also have more liquidity up here, these long wicks right here. We have 586, and we have our final liquidity at 621, which I was also calling out on live. So what you're simply gonna do is target all the way up here, right? Or as you see fit, wherever you're comfortable with your profit section, you could go from there. So you can see that once we entered around the same price, 538, 539. We have our stop loss in place, so this should be our protective low. Now we know that we accumulated, right? We accumulated, right? We had accumulation. We had the manipulation leg downwards, and now with PL3, what's the smart money concept is that price action will do the reversal and recover fully. So if you were able to understand that, right, PL3 is the exact opposite. So now we're gonna play this out, target all these equal liquidity, internal liquidity and external liquidity. We're gonna target all those, and we'll see how this plays out from here on out. Right? You can see TPs are getting smashed, TPs are getting smashed. We consolidate here for a little bit until we hit that final TP, right? So that's all price action is doing. It's not, if you're able to read these price actions, you're going to be able to tell like, okay, which direction is the market going? Because a lot of people have gone faked out and just stayed on these shorts, right? So that's the problem. We don't want that. We want price action to keep moving up and up based on our the scenario that we have, that it's accumulated, and boom, right there. You see TPs are hit. So you could even see that throughout this chop, if you held through, you could still major profit. But even if you want to sell up to TP2, that's totally fine, man. Like, you guys got to understand that even TP2 is 47 points, and on average, we're looking for 15 to 30 points. This beat our overall expectation. So that's great. That's amazing. We're gonna win no matter what the trade is, right? So you guys could clearly see accumulation range, manipulation down on the lower time frame, right? People are gonna keep shorting. Those that shorted finally got stopped out, and now we do the opposite. We have again a CISD right here, change in state delivery, right? We have a bearish fair value gap that we want to see get inversed. Once we get that inversed, check off. We got the retest right here, and we're gonna target all these liquidities, and boom, just like that, magic.